So what I'm looking at is this quarter is probably the last quarter of relative weakness, right? So, my view is, battery prices gave them the margin upside this last quarter, the prior quarter, and the CFO was very clear about the margin outlook for the fourth quarter. And the stock is responding to the Trump bump. Musk was one of the most passionate and authentic supporters of President Trump, and obviously a very close ally of his. Moving forward, the DOGE, the Government Efficiency Initiative, and all sorts of other things position him to play an interesting role in the Trump administration, right? So the last quarter of relative weakness, I think now he's got a new pool of buyers, conservatives that might not have looked at EVs quite as closely in the past, that allow an acceleration of demand in the core U.S. market, right? So that means we're looking at positive estimate revisions, and I'm asking myself, where are the catalysts, right? I don't see very many negative catalysts if estimates are going to positive revisions, and they're abundant positive catalysts. Things are going to look a lot like they did 11, 12, 13 years ago, where they can literally invent their own milestones and knock them down. Optimus, Grok, the AI initiative, the visibility around EV share gains, all of these, I think, will play to the positive for Tesla. And I think this is something that can be sustained for a couple of years. It's not like it's going to happen over a quarter or two. So, bias is now to the upside, not the downside. And market cap may be huge, right? 1.1, 1.2 trillion is a big company, but they're doing big things.
All right, but this is a CEO who has famously said that if you want to own my stock, don't own it because of the cars, own it because of robotics, own it because of the robo-taxi and full self-driving. Are you a believer in that part of the story, which Mr. Musk has said should be the main focus for his investor base?
So where I think I need to look at things a little differently than how I did previously is we look at the incremental solutions for FSD and the incremental solutions for robo-taxis. So, I've liked the way that Waymo has rolled out with, autonomous. The use of LiDAR is not long-term sustainable because of the cost out there. It's something that does need to come out of the vehicles over the longer term. But in an incremental basis, it's something that allows a more practical solution. But as I've talked to more and more of the engineers involved in these different projects over the last, few weeks, I've learned that, there's often 2 or 3 of these, what do they call them? Teleoperation engineers, basically human operators there to catch something that goes wrong in this robot. And Tesla even started hiring teleoperation engineers last week. So, Tesla's not going to do any worse than Waymo. And, if they're more intently focused on an optical-only solution, I think computing at the edge, some of this technology that's being brought to bring down the energy consumption for the compute is something that Tesla's going to be more adept at if that's where they're starting. And I think they're a real contender for the long run. So, the cyber taxi, yes, it's going to be rolling in the middle of next year, right? We're going to see incremental progress, and people are going to be able to have a tangible experience.
Correct.
And that's what I think actually drives valuation in the stock, and that's what drives, enthusiasm to actually own the stock.
Yeah, it's going to be giving less regulatory restrictions on robotaxis, definitely. Federal restrictions was one of the big reasons why GM stopped making its Origin purpose-built vehicle, right? That allows you to make a vehicle without pedals and steering wheels. So you need that federal deregulation, if you were to call it, a policy framework in order to allow for that. And that's what the Tesla Cybercab is. Why is that important? It cuts down a lot of costs, right? Currently the competition is, Waymo. You guys talked about that. It has pedals, steering wheels. It's another car company making the vehicle, right? So if you can make your own vehicle at lower cost, doesn't have steering wheels or pedals, you can bring down the cost. And Tesla's argument is they can actually gobble up market share. And if you look at autonomy and AI, etc., that comes at a much higher multiple. You have $1 trillion+ market cap for Tesla. Are you going to get there with an auto business for selling more cars or through AI autonomy, right? So autonomy is the way they can justify that market cap more they can from selling cars.
So it raises the question. Tesla bounced again today, up more than 5%. It was one of the best performers in the market. It's up more than 50% in a month. We have seen shares also today, to your point about Waymo, of Uber under pressure. It doesn't seem like this is a zero-sum game. Anybody who's tied to these regulations or exposed to these regulations, I would imagine, is going to benefit. But looking at Tesla specifically, are you surprised to see how much the stock has run in just a short period of time?
Yes and no. I think post-election, I was somewhat surprised, especially with the move on the $7,500 credit being cut. I actually think that's a negative for Tesla. I know there's a narrative that eliminating that credit is good for Tesla because it can compete better against other EVs. But the reality is in the US, penetration for EVs is only 8%. Tesla's real competition is Toyota Camry, right? Not the Chevy Equinox. So I actually think that credit going away is actually a negative for Tesla. But the reality is getting federal deregulation on AI, or specifically on self-driving vehicles, is a huge positive, assuming it all happens, right? Remember, this is all like in the, we don't know the details here, devil's in the details. But just because, my robotaxi valuation is 44% of my whole price target. FSD is 33%, right? So like the sky, not the sky's the limit, but you get the idea, right? Like we're talking about huge multiples. And so that deregulation, I'm not surprised.
So Tom, the stock has moved about $90 a share, I think, since the election. How much is Tesla now a Musk and Trump stock? It was a Musk stock before, and that had its benefits. And right now, Elon Musk and the president-elect seem very much aligned, and it's moving on some of this policy stuff. But how much risk is there for investors? How much should investors keep in mind the possibility that at some point these two guys, who have been known to be a little erratic, disagree on something? And what kind of an impact could that have on the stock?
Yeah, and I've written that I thought that the move after the election, a lot of that move wasn't really based on fundamentals, right? It was based on a maybe this could happen type ideology. But I do have to say, though, that something like deregulating, robotaxis, autonomy on a federal basis, it does matter. And that's also something that once a genie's out of the bottle, it's hard to kind of put that back, right? So it's a mixed answer to your question. I do think certainly like it's not completely tied to a president-elect, but certainly having policy that's a tailwind for you most definitely helps, right? So it's kind of a mixed answer. But I do think, like, if you believe in robotaxis, you do believe in autonomy, FSD, if you believe in it, having deregulation